Hey everyone, I welcome you all at Hold with Priyank YouTube channel. Today we are going to discuss a scalping strategy. If you are a stock market trader, you can use it for intraday, you can use it for swing trading. But if you are a crypto trader, if you are a currency trader, you can utilize it in your everyday scalping strategies. You can use it on 1 minute chart, 5 minute chart, or even 15-minute chart, or even hourly chart. As per your convenience, as per the timings you have for trading, you can utilize it even in Forex trading. So, in this strategy, we are going to use one indicator and we are going to learn a few things about price action. It is going to be very interesting and I hope you would like it. So, let's start the video. Just go ahead and read this disclaimer and I'll meet you with the charts. Here I'm going to use Bitcoin dollar chart. I will be using small time frames to make you understand this strategy better. You can see I have opened a 5 minute chart of Bitcoin dollar. However, you can use it on any script if it is stocks chart, if it is index chart, if it is crypto chart, old coins, or any other currency you like to trade, even on gold or silver. This strategy works like a miracle. It has been working very good so far for me, but will it create miracles for you? You are going to tell me in the comments after watching and understanding this strategy. So let's go ahead and understand it. So we are going to use one indicator for this strategy and the indicator name is Bollinger Band. Okay, so Bollinger Bands. Why the name is Bollinger Bands? Because there was a person who created this indicator. His surname was Bollinger. So this band is actually named on his name. Okay. In order to understand Bollinger Bands, you will have to remember one formula of standard deviation from your school or your classes. So what it is, I'm going to explain it now on the screen. So you might have seen a curve like this, right? This is usually we use in statistics and we call it a distribution chart, where we understand that the deviation from the mean value, if this is the mean value of any data, the price usually like to variate 95% of the times 2 sigma this side and 2 sigma this side. That means price may fluctuate 95% of the time in a range of 2 sigma from its mean value. And using this concept, Bollinger, the person who made this indicator, he created this indicator, Bollinger Bands, and said that price likes to move besides its moving average of 20, only 2 sigma this side and 2 sigma this side 95% of the time. And he says, when I know 95% of the time this level is going to act as a barrier, I can use them as support or resistance. And that's how, with a band or with this formula, he created an indicator which works as a dynamic support and resistance on your chart. So let's make it simple and come to the indicator directly, okay? Because this might be confusing for you. Let's make it simple. All you have to do is you can go into your broker or you can just go ahead on TradingView chart and go into the indicators and write Bollinger Bands. So if you will write Bollinger Bands or something like that, it would automatically come up on the screen and you can see it is Bollinger Bands. You will just have to click it once and there would be some lines on your chart and a picture like this will appear. In beginning, you might be thinking, what the heck is this? How I'm going to study this, but let me make it very simple for you. So you can see there are three lines actually and some background colors filled on your chart. So you can see there's one line that is red at the top, one line that is blue in the middle, correct? And the third line is green line, which is at the lower part. The upper one we call as upper band. The green one we call it lower band. And the middle one, obviously, we call it middle band. All right, so let's make it very simple for you. So this is a total bands, right? There are two bands which are outside the price. The center one is the moving average and this distance is 2 sigma and this distance is 2 sigma. So these bands at 2 sigma distance from the moving average work as resistance and as support, and we are going to use them to make a strategy which is going to help you a lot. So let's go ahead and understand it better. So we will go into the settings and we can make some changes as per your need. If you want these lines to be a bit thick or thinner, you can change that. So if I'm going to make it a bit thicker, it would be like this, right? So I made the middle one dark lower one dark, and top one is dark. But the lower one I want with a different color. And you can also make different colors, okay? Because I have green candlesticks, so that might confuse me. Otherwise, you don't have to change anything. The middle line or the moving average is actually the length of 20, and you don't have to change it for anything. The deviation you can see, standard deviation, I'm using 2, okay? You have the option to make it 3 or 1, but I would recommend start with 2 and understand it better first. And always use the 2 deviation. And that's how your chart looks like now. Now you don't have to fear how this chart looks. You can even change the background. If you think the background is creating the problem, you can go in style and remove the background. It will appear the similar chart as you use, but I like to keep it in the background. I don't know why, but I feel it good. Okay. So now you will have to use them as support and resistance. And the middle one is the moving average. It's as simple as that. That may work as for partials profit booking or for trailing of your stop loss. You can utilize it in that manner depending on your practice. Okay. So let's understand what strategy we are going to use. So as I told you, Bollinger confirmed that price more likely to use this as resistance and more likely to use this as support, because this is 2 sigma deviation distance, and 95% of the time these levels may work for you as support and resistance. That's what Bollinger said, not me. Remember this, okay? But when I started learning it or using it, I understood that price likes to go in trend. It keeps going up or it keeps going down. So whether they work as resistance, but they may not be used directly for a sell position, because if it is the resistance, that means that price may come down like this, but not every time. Price likes to go like this too. So how would I know when it will work as a strong resistance and when it will work like a normal resistance? Because I need to know when it will work as a strong resistance, then only I can make a trade setup. Okay. So what we're going to use, we are going to check a place where price closely like to retest either the resistance like twice or the support twice. So anywhere we see such kind of shape, which seems like a M shape at the top and W shape as the at the bottom. Okay. So whenever we see such kind of situation, you can also call it double top or double bottom. When we see such kind of situation, we might get a chance to short, and that's what we are going to use with the help of Bollinger Bands. So whenever you see that you have a Bollinger Band resistance at some place and price is coming towards it, when price breaks above it, okay, remember it, price needs to pierce or penetrate this particular resistance, and similar way if it is at the bottom, it needs to break or penetrate the lower bands. Okay, so when price break this band above and starts coming back, you don't have to short it here, you just have to draw a line here and wait for a breakout or a fake out above this level. So whenever price breaks above this and fails this breakout and drops back, this is the moment you need to notice a trade idea. Whenever you see such kind of situation when price has pierced the upper band or the lower band, and after some time after making a swing low, it come back and make a fake out above it or a failed breakout above it. After that, you just keep waiting for a low to be break and a market structure to be shifted. As price shift this structure, you just look for this place to enter a trade, and when price keeps dropping, you either wait for the lower band to be pierced again or 1:1 as your target. As simple as that. Okay. So all you have to do is you just have to wait a double top formation at the top or double bottom formation at the very bottom. But remember it, in this double top and double bottom, the second high or the second low must have taken stop loss above the first one or below the second one. Okay. Let me go ahead and show you it with example so that you can understand it better. All right. So let's come to the chart. I am using 5-minute chart. You can use any of the time frame. That does not matter. I'm using the Bitcoin chart. Okay. So let's look at this place right here and right there. Okay. We have two setups here. So I'll explain you with this one because this one seems more cleaner. Then I will explain you this one, and we will look into the back also more setups to form. Okay. So look at this. Here we have price penetrated through this, right? Price got penetrated through this level, right? Now we mark it and we wait for a fake out. So here you can see price faked out. But when it would be live, you will never know if it would be a breakout or fake out, correct? Because at that time, price may make move like this. You never know that. So what you are going to do, you're going to wait for price to come back and break a high. So if there is a high here, then you will wait for this breakout. But as I can see from my eyes, this is not a swing high. The swing high is formed here. So if the swing high is very high or it is at very distant and you feel that price has already pierced above the high, then you are not going to take this trade. Okay. But if you will notice again, price moved below this. That's another chance. So another chance we will try. Now there is no high. Then again, we don't have a high to break. So no setup is formed here. Okay. So let's come to this one. Okay. Now you can see, let me zoom it out. Price makes a low here and penetrate this. Perfect. Now we wait for a fake out below. Now price breaks below this, but it keeps dropping again, right? Now it makes a swing low here. It again breaks it. Now this is a fake out. Why I'm considering this as a fake out? Because price moves below it and come back to make a breakout of high. This is a swing high. Okay. If you don't know what is swing high and swing low, let me explain you in a minute. Whenever a candlestick has one candlestick in the left, one candlestick in the right, and the center one has the highest high. This one is lower, this one is lower. This is a swing high. In a similar manner, if there is a candlestick whose whose low is lower than the left one and the right one, this is a swing low. This is a swing high. Remember this, okay? One candle may form swing low and swing high both, okay? But you need to see it differently like this. This is a candlestick, left one is lower, right one is lower, then this is a swing high. Similarly, this candlestick, left one is higher, right one is higher, this is a swing low. So that's how you identify it. So you can see was a swing high. Now price breaks below this and immediately come back, breaks above this, and this is where your entry triggers. And 1:1 is your minimum target, or price peers above it like this, or even better to wait for the closing of the candle, and there you can book your partials or the rest of the position. Your stop loss would be below this. Let me show it with the risk to reward tool so that you can understand it better. This is the high. This would be your low. So minimum 1:1 should be your first target. There you go. There you have achieved the first target. There you will go 50% of your position and 50% you will trail with your stop loss near the entry. And then you can trail it up to here. Okay. Or you can trail it longer as long as you want to. If price comes back to your entry and your position is exited, then you at least have profit on half of your position and half is closed. That's how you do it. Or you can also make a system for yourself that I will make first partials at 1:1, second target I will book at 1:2.5 or 1:3 or 1:4, whatever you want to. You make a system like that and practice accordingly, because if something is working for me, doesn't mean that it will work for you. Okay. So look at this here. When we see here, price has broken above this, correct? Now we will wait for a breakout above. So if it has gone very high like this, then you don't consider it. If it is very close, then you consider it. Now I think it is quite close. So I will consider this. Okay. I will consider this as fake out and price starts dropping. Where is my swing low? Low. This one. Is it broken? No. A wick is not the sign of above the break broken of the level. You need to wait at least for the closing of one or two candlesticks. So it's not broken. So the setup is not formed here and we will avoid this trade. Then price comes back to break this, but price pierces the lower level. So we don't go for this short. It's as simple as that. Okay. Let me give you some more examples to make you understand this pattern. There you go. Okay. I'm looking for a good one, a clean one so that a perfect one. Yeah. Remember this. When candlestick breaks below this and second low does not goes below this, here we will not enter the trade. Whether you can see it has hit the target here, but we will avoid this situation. Why? Because we don't trust that and we don't know if it will work or not. Okay. So let's see. Here we have one here, we have one here, and we have one small setup here. Okay. So let's look at them one by one. Okay. Also, we have one here. Look at this. Price goes outside this, then price comes back below this, then this is the high broken. Now you can set 1:1 as your first target. If you think that the first target is very close to this level and your risk to reward does not match, then you can avoid this trade. Okay. Later on, price goes back up, then it does not go higher to this. Now look at this. Price goes back up. We have a fake out and we have a breakout if there is a swing low. There is not a swing low, then we will not consider this. We will consider this one as a swing low, and this is where we will enter the trade. So I'm going to use a short trade tool here. So here I have a short trade here, correct? And I have a high above it. And then minimum 1:1 would be my first target. There you go. There you have your first target. Okay. Then I had one setup here. Okay. So look at this. Price breaks above it. It makes a fake out. No swing low broken. Price makes a high above. No swing low broken. There's no swing low here because I don't see a perfect swing low. But if there is a swing low, then you can enter here. Otherwise, the swing low forms here. But then price has already reached to the lower level, so we don't trade here. So if there is a swing low here, you can enter here and wait for this. Don't worry if price goes back up. You have to understand that you need to give space for price to breathe. It will go up, it will show you drawdown, but you have to wait till your stop loss is triggered, and then you can see you could have make a easy 1:1 or even 1:3 trade here. Okay, that's how you are going to use it. It's very simple. All you have to do is wait for a setup. Now, when you look a cluster price like this, a cluster of price like this, you might be confused in the beginning. You might be thinking if it is the right setup or not. The only solution to this problem is practice. All right. This strategy I have taught to several people and I have got very positive responses from that. I was first learning it. I was first experimenting it. I was first trading it. I was getting good result. Then I taught it to many and those people have also got good results. That's why I'm teaching it to you as well. But will it give good results to you? It only depends on your practice and understanding of the strategy. So all you have to do is place an indicator that is Bollinger Band and start looking for one price action which goes outside of the bands, upside or downside. Then you have to wait if the second low breaks below it or not. If not, then there is no setup. If goes below this, then you wait for a high to be broken and then you enter for 1:1. It's as simple as that. It's a very easy strategy. You can use it for 1 minute, 5 minute, 15 minute, any time frame, any screen, and just go ahead and start practicing it. And do let me know in the comments below if you like this strategy or not. But I want to provide one disclaimer as well. Like I told you earlier, you will have to practice it. You will have to understand it if this strategy works for you or not. If a strategy works for me, that does not mean it will work for you. So just go ahead and start a demo account in trading. You are anywhere. Practice this. Take 100 to 300 trades. If these works out for you, just go ahead start practicing them on your trading system. Also, if you want to join me on my free Telegram channel of crypto or stocks, you can go ahead and check out the description below and you will find the links there and you can join them. Please do remember that don't search me on any other social media. You might find my fake channels or fake channels with my name or photograph. Don't go there. I don't have a paid service. Everything is free from my end. So go ahead and if you want to follow me on other social media, just take the link from the description below. I'll see you in the next video. Till then, take care. Bye bye.